I'm back today with a short video all about one of my playlist subjects, making money. In this video, I'm not going to cover a specific topic in depth. I'm really just going to cover everything that's been going on in the market the last few weeks. If you've been paying attention to the news at all, you have definitely heard of the GameStop, Reddit, Wall Street explosion that's happened. I'm not going to overly explain exactly what all of this is because at this point it's been covered by nearly every person that has anything to do with money, whether that's on YouTube or even all of the late night comedians have covered it. Everything you need to know for purposes of this video about the GameStop shenanigans is this. There are hedge funds, and hedge funds consist of people who are very smart, who make a lot of money for people who have their money with the hedge fund. One of the tactics that they use is called shorting. When you short a stock, it means that unlike regular investing, which is you purchase a stock and you make money as the stock goes up, when you short a stock, you make money when the stock drops. So you are betting that that stock, that company will do poorly, which in itself is just kind of a bummer, man. So this one particular hedge fund had amassed a very strong position in GameStop, assuming that they were going to fail, they being GameStop. And there were some people over on a Reddit board who found out that this hedge fund was shorting all this GameStop stock, and they thought, let's fuck with them. So what they did is they went and told everyone, hey, let's inflate GameStop. So they all went and bought it. And what happened to the people who were betting that it was going to fail is all of a sudden they are losing a ton of money because the stock isn't failing, it's actually going up. And in order to cover their positions, in order to make sure that they don't lose as much money as possible, they continuously needed to buy back the stock at the higher price. All that happened, and it was really wild to watch. And in the process of this, these people on the Reddit board, Wall Street Bets is what it's called, they started inflating the stock prices of other stocks that they noticed that hedge funds had also been trying to short. So AMC, Nokia, BlackBerry, and even I got in on it a little bit because I was curious about this. So I bought some AMC and I bought some Nokia, and immediately it So what I did the next day, I noticed that it was back up. It was a little bit over the price that I purchased it for. I put a 15% trailing stop loss on it, thinking, well, if it does go to the moon, as they say, at least I'm going to protect my principal and maybe some earnings. And then it tanked, and it literally sold about 30 seconds after I placed a trailing stop loss for the sweet, sweet earnings of 1 cent. But I didn't lose my principal, and I got to participate in this weird social experiment. Okay, so when all this happened, it really drummed up a lot of interest for people in the market, maybe people who are new to investing, because it's a really exciting story. I mean, they're already fighting for rights to make movies about it. And everybody loves a get-rich-quick scheme, right? Everybody loves hearing those stories, and they think, what if it's me? It's the reason why we buy lottery tickets. We really have a really rare chance of winning, but it is fun to dream of, well, what would I do all of a sudden if I had $30 million? And I think a lot of people actually did make quite a lot of money, and good for them, and I hope they protected their principal and their earnings by having trailing stop losses. Who knows? At this point, it's kind of looking like the Wall Street Bets is actually affecting the market. It seems like they continuously reset their sights on something and inflate the stock prices there, gaining money for people. But also, if you're late to that stock and you buy high, and that stock isn't really worth that, like the company that's behind it isn't necessarily doing those numbers, that stock price will go down and you might be left holding the hot potato, which is not what you want to be doing. All of this might be fun and everything, but please be smart about it. This is not wise investing. This is a game. And if you want to participate, that's totally fine. Do not participate with money that you need. Go into it with money that you're willing to lose. And then you can have fun, and if you lose your money, c'est la vie, you were willing to lose it. But this type of investing is really no different than gambling, and you wouldn't go into a casino unless you had a money cap, because it wouldn't be very smart of you to do. Amidst all of this, another thing that got grouped into the conversation was Dogecoin, which is a cryptocurrency. I even had a couple people write to me and ask if Dogecoin was a good investment. And this was my response. I literally don't know anything about crypto. I mean, I do know some things, but It is the wild, wild west for reals. Cryptocurrency should not be thought of in the same way as investing in the stock market. It is literally apples to oranges. Now, crypto can be a useful part of your investment portfolio, but I am telling you this, tread carefully. Unlike a stock in the stock market, cryptocurrency does not have anything backing it up. There's no company behind it. There's no regulators like the SEC. It is literally just made up. And specifically, Dogecoin was started as a joke. You want to go into it saying, I don't care if I lose this money. Let's invest in crypto. Why not? I do think crypto has a place in the future because a lot of companies are building out platforms in which they'll be able to accept crypto, but it's still really volatile. It's a little bit of a, what's gonna happen? It could be, as they say, to the moon, or it could just fall flat on its face. Another thing about crypto is it's not as easy as buying a stock on the stock exchange. It's pretty complicated and I don't fully understand it, but it requires a lot of steps. So that's kind of what's gone on so far. GameStop went through the roof because of some amazing nerds on Reddit. Wall Street hedge fund managers were freaking out. Wall Street was freaking out. And crypto is interesting, worth a look, worth a learn. And there are a lot of people making amazing videos about crypto on here. But otherwise, the classic investment style, if you are someone who is new to the market, is get yourself a brokerage account, get an IRA, put your money in an index fund, but all in all, you literally put money in the S&P index and ignore it and check in on it once every 6 months or so. It's just not as exciting. But here's the thing about the stock market. Safe and wise investing is really fucking boring. It's not exciting. And that's why this whole story of the GameStop, Reddit, Wall Street hedge fund, it was so exciting. Everyone wants to participate now. But I caution you, if you're a new investor, tread cautiously because it's pretty wild out there. That's all for now, and really apologize for not having videos during that time. My husband and I bought a home, so that's very exciting. That's it for now. If you like this video, please consider subscribing to my channel, where I make all kinds of videos about making things, whether it's costumes, whether it's wig stuff, this isn't a wig, or whether it's about making money. Now a warning. Yes, if you happen to be a lucky person who made a ton of money off of GameStop, AMC, Nokia, BlackBerry, and all of that, please set aside a percentage of that for your short-term capital gains. You're going to owe a short-term capital gain on that come your taxes of 2021, and you do not want to be caught looking at a huge tax bill because you didn't take part of it and set it aside in a savings account and just ignore it for the next year until you have to file for 2021. Don't screw yourselves. Be smart. Anyway.
Subscribe to my channel if you think there should be a crypto called Glamcoin.